Okay, welcome viewers. Today I am going to present question and answer program for entrepreneurship, chapter 6. As usual, the direction is choose the best answer. Question number 1. What is the primary reason business seek financing? A. To increase employee salary. B. To acquire capital assets, fund operations, or develop new products. C. To reduce product price. D. To avoid paying taxes. The answer for question number 1 is B. To acquire capital asset, fund operations, and or develop new products. Question number 2. What are the two general sources of business financing? A. Donations and bank loans. B. Equity and debt. C. Personal savings and government grants. D. Credit cards and trade credit. The answer for question number 2 is B. Equity and debt. Question number 3. Which of the following is an internal source of financing? A. Bank loan. B. Trade credit. C. Personal saving. D. Bond. The answer for question number 3 is C. Personal saving. Question number 4. What is the purpose of working capital in a business? A. To purchase long-term assets. B. To fund daily operations and short-term expenses. C. To increase tax liabilities. D. To reduce the number of employees. The answer for question number 4 is B. To fund daily operations and short-term expenses. Question number 5. Which financial instrument allows a company to borrow money from investor with a promise to repay? A. Equity shares. B. Bond. C. Trade credits. D. Lease agreement. The answer for question number 5 is B. Bonds. Question number 6. What is the key difference between equity capital and debt capital? A. Equity capital is borrowed while debt capital is owned by the business. B. Equity capital represents the ownership while debt capital must be repaid with interest. C. Debt capital is risk-free while equity capital involves financial risk. D. Equity capital is short-term while debt capital is permanent. The answer for question number 6 is B. Equity capital represents ownership while debt capital must be repaid with interest. Question number 7. Why do business prefer lease financing over purchasing assets? A. It eliminates the need for down payments. B. It permanently transfers ownership to the lease. C. It doesn't involve any financial obligations. D. It provides tax benefits and preserves cash flow. The answer for question number 7 is D. It provides tax benefits and preserves cash flow. Question number 8. How do venture capitalists differ from angel investors? A. Venture capitalists provide small loans while angel investors invest in large business. B. Angel investors require government approval while venture capitalists do not. C. Angel investors provide debt capital while venture capitalists only invest in charity. D. Venture capitalists invest in high-growing companies while angel investors provide early-stage funding. The answer for question number 8 is D. Venture capitalists invest in a high-growing company while angel provide early-stage funding. Question number 9. Which of the following is an advantage of trade credit? A. It requires immediate repayment. B. It allows business to obtain goods and services before making payment. C. It is only available to large corporations. D. It eliminates the need for suppliers. The answer for question number 9 is B. It allows business to obtain goods and services before making payment. Question number 10. What is the primary role of microfinance institutions? A. Provide large-scale business loan. B. Offering financial services to small business and individual without accessing the traditional banking. C. Regulating commercial banks. D. Controlling inflation. The answer for question number 10 is offering financial services to small business and individuals without access to traditional banking. Question number 11. A startup need short-term funding to cover investors' inventory cost. A startup need short-term funding to cover inventory costs. What financing option should they consider? A. Venture capital. B. Working capital loan. C. Equipment financing. D. Public stock sales. The answer for question number 11 is B. Working capital loan. Question number 12. If an entrepreneur wants to raise funds from the public in exchange for company shares, what method should they use? A. Debt financing. B. Crowdfunding. C. Public stock sales. D. Trade credit. The answer for question number 12 is C. Public stock sales. Question number 13. A company needs to purchase expensive machinery but want to avoid large upfront costs. What financing method should they use? A. Lease financing. B. Trade credit. C. Short-term bank loan. D. Angel investment. The answer for question number 13 is A. Lease financing. Question number 14. If a business is struggling to obtain bank loans due to lack of collateral, what alternative financing method could they use? A. Personal saving. B. Microfinance loan. C. Trade credit. D. Public stock sales. The answer for question number 14 is B. Microfinance loans. Question number 15. A business wants to fund expansion by selling share to investors, but retaining full control. What is the best option? A. Debt financing. B. Private equity investment. C. Bank loan. D. Government grant. The answer for question number 15 is debt financing. Question number 16. How does crowdfunding differ from traditional financing? A. It relies on individual contribution rather than institutional investors. B. It is only available to large corporations. C. It doesn't involve any financial risk. D. It guarantees investment returns. The answer for question number 16 is A. It relies on individual contributions rather than institutional investors. Question number 17. A company is considering using finance lease instead of an operating lease. What is a key difference? A. Finance leases transfer ownership to the lessee while operating leases doesn't. B. Operating lease provide tax benefit while finance lease doesn't. C. Finance lease have shorter contract periods. D. Operating leases require higher interest payment. The answer for question number 17 is A. Finance leases transfer ownership to the lessee while operating leases do not. Question number 18. A company wants to choose between venture capital and angel investors. What should they consider? A. Angel investors require higher interest payment. B. Venture capitalists prefer companies with high growth potential. C. Angel investors only invest in large business. D. Venture capital is a short funding option. The answer for question number 18 is B. Venture capitalists prefer companies with high growth potential. Question number 19. A small business wanted to expand internationally but lacks funding. A small business wanted to expand internationally but lacks funding. What combination of financing options should they consider? A. Trade credit, crowdfunding, and venture capital. B. Personal savings and microfinance. B. Bank loans and barter trade. D. Equipment leasing and sales venture. The answer for question number 19 is A. Trade credit, crowdfunding, and venture capital. Question number 20. An entrepreneur is launching a social impact project. What is the most suitable financing option? A. Equity crowdfunding. B. Government grant. C. Personal savings. D. Traditional bank loan. The answer for this one is B. Government grant. Government grant. This is all about question and answer program for chapter 6 entrepreneurship. Thank you viewers for attending this program.